Welcome to Stock Smarts, the channel that helps you make smarter decisions with your money. I'm here to break down the top investments in 2025, whether you're looking for stability, income, or big long-term growth. And this year, more than ever, it's important to invest with clarity. Because not all investments are created equal. So in this video, we'll go through 3 levels of investing: zero volatility, medium volatility, and high volatility. You will get to see what matches your risk appetite and your financial goals. Let's begin. First category, zero volatility. These are the sleep well at night investments. You don't need to check your phone 10 times a day. They don't make headlines, but they work. And in 2025, the big winners here are high-interest digital savings accounts. Platforms like GSave, CBank, and GoTime are offering higher than usual interest rate, sometimes 4 to 6% per year. Now that might not sound exciting, but here's the key. These returns are guaranteed. There's no risk of losing your capital. Your money stays liquid and the interest compounds quietly in the background. These are perfect for your emergency fund or short-term goals. If you're saving up for something in the next 1 to 3 years, this is where you park your money. MP2. The second low volatility option is MP2, a long-term savings program with government backing. It offers higher dividend rates than traditional savings and time deposits. Historically, returns have ranged from 6% to even 7% in good years. MP2 is perfect for long-term capital preservation. Yininto. And it works even better when you don't withdraw the dividends. Just reinvest everything and let compounding do its magic. This isn't for getting rich quick. But if you want steady, tax-free, passive growth, MP2 is your friend. Now, let's move into the medium volatility category. These investments can move up or down, but if you choose wisely, you can get a balance of income and growth. US stocks for capital appreciation. Let's be honest. So if you want your money to grow fast, the global stock market is where you look. And among them, the US stock market continues to lead. From tech giants to healthcare innovators, the US still has the best chance of exponential growth over the next 5 to 10 years. Yes, the market goes up and down, but history shows us that over time, it trends upward. If you're thinking long-term and don't need to touch your money anytime soon, US stocks give you the best shot at wealth creation. Philippine stocks, only for dividends. Now, let's talk about the Philippine stock market carefully. If you're buying stocks here, it should be for dividends only. Don't go in expecting capital appreciation. Don't expect the PSE index to give you life-changing returns. In fact, there's a bigger chance Bitcoin hits 10 million than to see the PSE triple in value anytime soon. But here's where it shines: cash flow. We have reliable dividend payers, banks, utilities, and telcos. They may not grow much, but they reward you for holding. So the play here is income, not growth. If you can build a portfolio of high dividend stocks and sit on them for years, the monthly or quarterly payouts can serve as a second income stream. Just don't expect fireworks from the index itself. This isn't the US, and that's okay. You play the game according to the board you're given. If you want to know more about investing in the stock market, check out the links down below for our books and our online on-demand seminars. Whether you're new or experienced, we've got something to help you take your investing to the next level. Now let's move into the high-risk, high-reward territory. No cash flow, no guarantees, but massive upside potential. This category is not for the faint of heart. Bitcoin continues to be the most volatile, most talked about asset class in the world. Is it risky? Yes. Is it unpredictable? Absolutely. But if you zoom out, you'll see that Bitcoin has outperformed almost every asset over the last 10 years. Its scarcity, decentralization, and increasing institutional adoption make it a serious contender, not just as a speculative play, but as a long-term store of value. Don't go all in, but having a small allocation, maybe 1 to 5% of your portfolio can give you exposure to potential asymmetric gains. Just remember, this is not for short-term parking. It's a long-term, high-risk bet. Gold. Next, we have gold. It doesn't give cash flow. It doesn't multiply your wealth overnight, but it protects your purchasing power. When markets panic, when inflation rises, or when currencies weaken, gold holds its value. It's not going to make you rich, but it's going to protect you from going broke. In 2025, gold remains a hedge, a stabilizer in a portfolio that might have exposure to more aggressive assets like stocks or crypto. So, how do you put all of this together? Simple. Think of your portfolio in layers. Zero volatility for security and short-term needs. Use digital savings platforms and MP2. Medium volatility for balanced growth and income. Go global with US stocks and use Philippine stocks purely for dividends. High volatility for potential upside. Add Bitcoin and gold with a long-term view, knowing the risks involved. The truth is, there's no one-size-fits-all strategy. The right mix depends on your goals, your timeline, and your risk tolerance. But if there's one thing you should avoid in 2025, it's staying stuck in low-yield, outdated strategies. Gone are the days when just saving money was enough. Inflation is real. You need to make your money work for you. And that starts with understanding the tools available and using them with purpose. Thanks for watching another episode of Stock Smarts. If you found this valuable, don't forget to like, share, and subscribe. And hit that bell icon so you never miss a video. Like whether you're starting with 1,000 pesos or 1 million, the most important step is to start. The longer you wait, the harder it gets. And always remember, right? It's not about timing the market. It's about time in the market. You win in life when you keep on stacking assets that help you grow wealth. It's still better to stack assets and expose yourself to risk than to spend your money and have nothing at all. See you in the next video.